Hello guys, so this is our second tutorial. So I'm going to be teaching more about the candlesticks. Like what I said before, for you to be able to know how to trade, you should know how the candles are moving and the meaning of those candles. So today we are going to start with the morning star. These are examples of Dutch candlesticks. So we have the morning star. This morning star is like this, guys. As you can see. So this is the Dutch candlestick. So whenever you see a Dutch candlestick, it will be having a small body and two tails here. Okay. So how do you do it? You see this type of a candlestick, right? What you do, you follow the next candlestick. So this is the next candlestick. So once this candlestick breaks the previous high of that Dutch candlestick, that is when you enter your trade. So this is the morning star candle. It usually shows this type of a pattern. So let me show you a typical example on the chart. So this is our candlestick, the one I'm talking about. The morning star is usually found at the bottom of the trend. So usually the market will be moving like this, right? Then there is this candlestick. This is the morning star signaling the bullish movement. So when you see this second candle, what you can do is you can wait for that candle to close, right? Just after it is closed, you wait for it to pull back, maybe around the previous high here. Or you can wait for the next candle to break this candle. Then you enter your trades and you'll be adding positions as the market is going up. Avoid using very big lot sizes, guys. If you are not yet competent about trading, avoid using big lot sizes. So I'm going to move on to the next page. We now have the evening star pattern. This one will be signaling a bearish movement. So it will be like this. We have a bullish candle here, then we have a small Dutch candlestick, then we have a bearish candle like this one. So our market is about to go down. So you just apply the same concept like what I just said before. So here, this is a typical example on the chart. So you focus on this candle, right? Then it breaks. Okay. Then you wait for the third candle. This is the third candle. The moment that third candle crosses the previous high, that is when you enter your trade. Always know how to trade, guys. Don't rush to enter trades. Trade like that. You'll make more money. So let's move on to the next page. We now have the hammer. It's a good pin bar again. The hammer candlestick is created when the open high and close are roughly the same price. I hope you get it. Let me show you what it looks like. This one. So it will be looking like a pin bar with a long shadow. But this one is known as the hammer. Okay. This one is known as the hammer. So where do you usually find the hammer? You usually find the hammer at the bottom of the trend. That is when you can respect it. But if you see a hammer at the top of the trend, there is no chance for you to buy using that analysis because you are most likely to lose. So let's move on to the next page. We now have the shooting star. The shooting star is as good as a bearish pin bar, but it will be having a very long shadow and a small body with the same structure as the hammer. So usually you should respect the shooting star when you see it at the top of the trend like this. Then we have this one, the Harami patterns. They are also useful, but you can try them, but I usually prefer using other patterns. We have this one. It's less likely to see such type of a pattern, whereby there will be this smaller candle and this smaller candle. It's rare. So we can see what happens here. We have this small candle, and there's another candle like this. It's a sign that the market is now going down because it has broken here. You get it right. So the bullish Harami is like this. There will be a very huge bearish candle like this, then a small candle will close like this. Once it closes like this, it doesn't signal. It doesn't mean that the market is now going down. You should not enter like that. You should wait for the third candle to break so that you can see the overall direction of the market. Same as here. We have this long bullish candle and it's more bearish. So we wait for the third candle, which is this one. It broke the previous low of that candle. So the market is now going down. So these are some of the patterns that you should know. And I believe all of you have this book. So try by all means to read all of these patterns. Then we can move on to the next chapter. So here we are now at the market structure. Market structure, now we're just still talking about the outlook of the market, whether it's a trending market or something else. So this is what a trending market will look like. You should draw trend lines. Your trend lines should touch these points. As you can see, so we'll be having a high, high, low, high, low, high, low, high, low, high. So this is a typical example of a trending market. The market will be moving in a way that is, let's say it will be a descending channel or an ascending channel. The descending channel is just a channel that is going downwards, for instance, like this one. Then this one is the typical example of an ascending channel. So if you draw your trend lines here, you see that the market will touch the bottom trend line, then will reverse. That is how the market moves. And this is where you can also consider smart money concept, because it usually respects smart money concept. So that is how it works. So how to trade trending markets. This is the typical example of a trending market. So you enter on the impulsive moves only. Here, this is the impulsive move. So it is going to retrace to this point. At this point, you're now using a smart money concept. Okay. So if you draw a straight line here, you can see that the moment it touches that previous high horizontal line, it will start to go up again. So you'll be trading this impulsive move. For you to make more money, try by all means to analyze this in a bigger time frame. Same as this one, which is an ascending channel. So that is how you trade a trending market. You just draw your trend line. So I'm not teaching you more about the support and resistance level so that you'll be able to draw your trend line. So this is a good example. As you can see here, this will be your support, support, support. If you draw a trend line like this, a line that will touch all these points, this will be your support. Then your resistance level will be this one. Same as here. Resistance level, resistance level, resistance level. That is how it works. How to draw trend lines now. So this is a typical example. You're now making sure that your trend line should touch all the visible points. You can do this on a bigger time frame like H1 or M5. No, H1, M30, M15, it's better. Avoid drawing trend lines on M1 only. Use top-to-down analysis. Here we have a typical example of a ranging market, whereby the market will be playing around the same area like this. So how do you enter such a trade? You wait for that trade to break out here. So your entry point should be just after the breakout. You will make more money right there. Or you can do this. You can enter a buy here, you sell here. But I usually prefer entering after this breakout. That is when impulsive moves will happen. Same as here. Our market was ranging like this. You can see, right? Then this is your breakout point. So nowadays, it doesn't usually work like that. It will break out, then pull back maybe to this level. So you should wait for it to pull back. Then you enjoy your money. Like what happened here, there was a breakout and it pulled back. Then you enter your buy. And then you make money. That is how you do it. So we are now moving to the next page. So about top to down analysis, we were just talking about starting your analysis on a bigger time frame, then you move to a smaller time frame. That is how you just analyze your market. So you start from H4, then you move to H1, M30, then later on you move to the M5, whereby you do your final analysis so that you can enter your trade depending on your equity. So here we are now talking about the trading strategies, but the trading strategies, they differ with the type of traders you are. If you have done all the basics that I've taught you, I'm pretty sure that when you start executing trades, you're going to see your own strategies. But I have my own strategies that I think they are very useful, and I'll be teaching you those strategies on my next tutorial. So thank you very much.